Hey traders, welcome to this week's episode of Traders Trade, episode 6 for the week of September 14 to 18. Hope you guys had a good week last week. As you know, we had a rough week, but it was expected, right? If you guys have been watching these episodes, the warnings were there. And I just want to share with you guys that the whole point of Traders Trade is to help bring the institutional grade materials, resources to you, the retail traders, so that it can help benefit you to trade smartly and wisely. So let's go. Let's recap last week. The market and technology sector had a huge sell-off. The QQQ or the Nasdaq was down 11% and the S&P 500 was down 7%. So we've been seeing in this market right now, we have these run-ups and then we get these huge pullbacks. So just be careful out there. Don't think that the market only goes up, okay? I know that's a fun thing that Dave Portnoy is saying, but you know, stock market does go up, but don't think it always go up. So the ECB also kept their rate at 0%. And also moving their inflation target to 2%. So similar to our US Feds, again, it seems like they want to increase the value of assets, which is good for stocks, right? For economic reports, initial jobless claims was 844,000, 840 was expected, and the CPI was plus 4%. Okay, let's look at the market. The S&P 500, we were in this uptrend and that was broken last week. And then we did try to go back up, but unfortunately there were not enough buyers to continue and the sellers took us right down below the upward trend. So now this trend line is going to become the new resistance. We did rest right at the 50-day moving average. So we'll see where we're going to go this week. Also note that we are below the pre-COVID high. So pretty much all the gains in August have been taken out. Dow Jones Industrial was in this upward trend. Remember that it failed to get to the pre-COVID high here, failed back into the channel and then actually broke below it. And same thing, it tried to run back up but met resistance now, and also at the 50-day moving average. Also, this was the June high, hoping that the support here will hold. Otherwise, we're going to go down. Next support will be at the 200-day moving average. And a good note is the Dow Jones Transportation. It did peek its head above the pre-COVID high, but unfortunately fell below it and was able to get near it at the end of the week. The uptrend line is still intact, so we got to see how it's going to play out this week. If it holds, then it's going to continue going up here, but if it fails, then hopefully it can just continue to move sideways. Oof, okay, so the Nasdaq, this was where the blood in the streets were. So since back in April, we had this tremendous up channel right here, clear up channel. We broke above it, but we had a blow off top, fell back into it, and turned out to be a failed breakout to the top. So now we broke below it. We try to get back up, but now this is acting as resistance. And also this is where the 10 and the 20-day moving averages are. And there aren't enough buyers, so the sellers took it down and actually closed below the 50-day moving average, which tells us that sellers are in control. What I would like to see, to be honest, is that we still have a lot of froth in the market. I would like to see a bigger close below the 50 so that we can shake out more weak hands so that large institutional buyers can come in and buy those up. That will help us run up much higher. Otherwise, we're going to still have a lot of these small hands in the market, and we're going to have just these ridiculous run up and crashes. But if we can have a big drawdown below the 50, entice the large institutions to come in and buy and hold, that's how we're going to move up higher. Russell 2000 tried to make a new high here from August, but failed and broke below the June high and below the 50-day moving average. So sellers are in control. This trend line is still intact. So we got to see if that holds this week. Otherwise, the 200-day should be acting as good support. Also, there seems to be a lot of good buyers here too. So if anything, if it's going to fall down, it will fall down to this area, and hopefully the buyers will come in and hold it. So in summary, the only light in this market is the Dow Jones Transportation. Everything else is bullish. I'm sorry, bearish. Okay, on to the sectors. Material is a star. It broke above the pre-COVID high, broke above this triangle, but failed below it, but was able to get right back above it and close above it last week. I don't see any big resistance up here. Maybe this price resistance here, but it looks like it can continue to go higher here. So if I had a sector that I would go bullish on, it would be materials. Okay, energy. So poor energy. All right, we keep talking about this every week, and it's like, geez, energy, like give yourself a break here. But we were in a descending triangle. We had this good area of support, but that broke last week. So it's definitely going to be going down. This trend line is going to be acting as a really strong resistance. If we're going to see energy in an uptrend, we need to see it break this strong resistance. I have a target of 30 in the near future for energy, and hopefully it doesn't go back to the March low. That will be a big, painful drawdown. Financials was in this triangle, tried to break above it, but failed and broke below it and closed right above the 50-day moving average. So for financials, I wouldn't do anything in this sector right now. Too many congestions right here with the moving averages and the trend lines. So we don't know what's going to happen. I would, wait it out, see what it's going to decide to do before taking action. For industrials, we were in this triangle, upward triangle, broke above it, but again, failed breakout, broke below it, bounced off the support from the June high and closed above it. But it's still a little bit far away from the 50-day moving average, which seems to be attracting the other sectors. So just be careful here. This is going to be acting as a new resistance. And then this is an area of support. So it's going to be in this area for this week. Technology, similar to the Nasdaq, closed right at the 50-day moving average. I'm going to say we're going to maybe be here for a little while. Buyers will think this is the bottom. They're going to try to buy it up. But if there's not enough buyers, the sellers are going to take us down below the 50-day moving average. And maybe down to this 110 here where there was support back in this new support that formed in July. But guys, be careful of a bull trap, okay? Don't think that, this is the bottom and we're going to just take off from here, because we have this resistance now. Okay. And again, just watch for the price action. If there aren't a lot of buyers, then the sellers are gonna take us down. Consumer staples was in this tight uptrend that broke last week, broke below it, and also broke below the pre-COVID high. And it's looking like the 50-day moving average is going to be a magnet for it. So just be careful of that. Consumer discretionary was another bullish sector that also got taken down last week. It was in this upward triangle, broke above it, but had a failed breakout to the 20-day moving average, bounced off the support, and was able to close above it. So that's good to see. It's also still above the pre-COVID high, but the 50-day moving average is still kind of far away. So just be careful. Right now, it seems like the market wants to stay around. It's gravitating towards that 50-day. So this is still far away from it. So if there's going to be more selling pressure, it might take this down. For real estate, we were in the symmetrical triangle, broke above it, but that was a failed breakout, and we closed right at the bottom of it, where also a lot of the moving averages are. Similar to financials, this is another sector that I wouldn't do anything at the moment. Just let it play out. It's just too many moving averages here. The trend lines are converging here. So I would wait to see what it's going to decide to do, either up, down, or sideways. And lastly, utilities. It was in this symmetrical wedge, and here's a tighter and more recent wedge that formed, but it won't be as strong as this bigger wedge. And it's pretty much just consolidating inside this wedge. I would just trade sideways for this sector. Healthcare was looking bullish a few weeks ago, but fortunately the market took it down also. It broke above the pre-COVID high back in July and was high basing above it, peaked above it, looking really bullish, but unfortunately that was a false breakout. It broke below it, and right now it's right at the pre-COVID high price. And also now it's below the 50-day moving average. Again, sellers are in control. Communications also had a big correction last week, about 10%. It was in this upward trend line that broke last week, and it tried to rise up, but met resistance from the 10 and the 20-day moving average, and the sellers took over. Now it closed right above the 50-day moving average. If the 50-day moving average doesn't hold, then we will be testing the pre-COVID high again. So in summary, materials looks good. After that, it would be industrials. Besides that, everything else looks bearish, especially energy. But I wouldn't short anything in this sector because it's already being down so much, right? I mean, you have to look at your risks and rewards. I mean, how much more can you get out of this sector by shorting it? So I would go after something that's overvalued still and have room to go down. So I would look at something like technology or communications. Okay, on to the educational contents. This week I have for you another market breadth analysis from Ciovacco Capital. So check that out. He gives you a good historical look at how the market performed in the past and how we can apply it to the current situation. And then also I posted the note from JP Morgan for their private clients about the current stock market. The links are in description. And this is a great piece here from Alta Capital. This is their analysis of the best performing stocks in the past 5 years. It's a huge analysis It has 645 slides, so it's going to take you some time to go through, but I guarantee it'll be worth it for you. So if you're after these multi-baggers, definitely check this out. The link will be in the description. On to events for this week. For earnings, I'm looking forward to Lennar on Monday and FedEx and Adobe on Tuesday. So this week, the market corrected off August parabolic move. Be careful of a possible spike below the 50-day moving average for the indexes. And it looks like the second stimulus bill is stalled right now in Congress. It doesn't look like it's going to get a green light anytime soon. For economic events, I would watch out for the FOMC statement on Wednesday. And I think everything else, I don't think the market really cares. So just watch out for the Fed statement on Wednesday. So in conclusion for this week, we are still in choppy waters. I mean, don't think that the market's gonna take off from here yet. And you know, during these choppy times, it's okay to just do nothing, right? And just let the market decide what it wants to do, right? Before you head in to the trend again. Otherwise, you're just going to get caught up in these flip-flop moves. All right, traders, have a good week. Be safe out there. Take care.